stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A bank and a social media platform is what we're going to hear about in this go-around with Kevin Cook and Nina Mishra here at the desk. Kevin, we're going to start with you. You're going to take a look at Twitter for all the skeptics out there.
Absolutely. I'm talking to skeptics. If you're an investor and you're skeptical on Twitter, or if you've never used Twitter and you're just skeptical about the platform altogether, this is for you. We're going to look at the fundamentals, we're going to look at the technicals, and then the real value of Twitter. So first, the fundamentals: big earnings beat in October, 50% EPS beat. Part of the reason it's a Zacks #1. And revenue grew 29% year over year. Advertising revenue, obviously very big for them, crossed the $750 million mark. Let's take a look at the price and consensus chart here on my screen. You can see the long, slow struggle of Twitter to become a viable investment again. You know, it hung out for 2 years, almost below $15, but it was always giving earnings surprises. You can see the big green arrows there. And then estimates finally turned around. This is them monetizing the platform. Stock got up over $45. You know, there's the last big earnings beat here, this big green arrow. And you see estimates sort of vacillating here around the, let's say, 85-cent mark. But the company's profitable, trading 37 times forward earnings, expensive, trading 7 to 8 times sales. But let's take a look at why I bought it on a technical basis also, besides the fact that it's a #1. So if you look at my, I got a stock charts chart up here. We bought it below $27.50 on December 26th, or thereabouts, late December. And I was looking for this support area to hold because look here's what you had. Big gap up on the earnings beat. We go sideways a little bit. The stock was holding up better than just about anything during the correction storm of December. Then it tanks, but it holds this, you know, we'll say 27 level. And I said, we got to buy it there. So, you know, should the stock trade for 40 times or 50 times? I'm not so sure, but I was willing to take a stab at it down there. And to me, it's a free trade. If it goes down there again, I'd get out, you know, basically cut my losses at break even. But I think it's got upside here. Bofa Merrill just upgraded it, double upgrade from underperform to outperform, and a $39 price target. Now, let's talk about the real value of Twitter. I want to go to an article I wrote, The Bull of the Day, on December 26th. Highlighted a lot of the fundamentals. You can find this article on Zacks just by searching Twitter, Bull of the Day, or my name and the December 26th date. And I compare Twitter to Facebook. Okay, everybody wants to delete Facebook, right? Facebook's got all kinds of problems with fake news, but it ends up being very insular, whereas Twitter is the opposite. Twitter, you are getting access to credible experts in just about every field you can imagine, whether it's investing, you know, any finance, trading, science, technology, the arts, politics, if you want, right? Health, fitness, nutrition, and you choose the experts that you want to listen to. And once you get familiar with somebody who is an expert in their field, then you have them in your feed. So you can vet your own news feed on Twitter. And then I also highlight, you know, my reasons for using it. I use the hashtag value of Twitter here. You can see on my screen my top 3 uses of the ecosystem. I share my content and views with a huge open discussion cauldron. You meet lots of fascinating people. You can eavesdrop on other conversations, and you can get fresh news and articles from anywhere. So you could subscribe to the New York Times, Wall Street Journal, Washington Post, whatever you subscribe to. But sometimes on Twitter, you're getting real-time news even faster, and you're getting the stories that you want to see. So I think Twitter has become an invaluable platform and a social media platform that will persist. So if they can monetize it more and get this, get the revenue above, say, $5 billion, then, and that gets traction, then you've got a sustainable investment, I think, if you're buying it in a good location, because the value of the platform will persist. The people who've come there as experts offering their expertise, they're going to stay there. And people like me will keep going there to learn, to share, to engage.
So you bought it for your Taser service?
Yep, we own it in Taser.
Okay. Nina, you've got an Indian bank here. I'm going to let you pronounce the name.
It's ICICI Bank.
Okay.
It is one of the largest private sector banks in India with a network of almost 5,000 branches. So I think it's an excellent play on the rising middle class in the country. We know that their incomes are rising, they are spending more on everything, including banking products. And India was earlier a cash-based economy, but about 2 years back, the government carried out a big demonetization drive, and because of that, the country has seen a lot of digitization, especially in the banking, and the demand for banking products has been rising. And this bank is not exposed to global growth concerns so much, particularly slowdown in China because its main customers are Indians. And India is the fastest growing economy in the world. Now, bad loans or non-performing loans are a problem for the Indian banking industry, but they are a bigger problem for the public sector banks in India, not so much for private sector banks like ICICI Bank. And recently the central bank has taken some actions. So that's, it suggests that the worst of bad loans or NPAs problem is over in the country. And ICICI Bank also saw a leadership change recently, so that should be good for the bank. And we know that emerging market stocks, all assets were beaten down earlier last year because of rising interest rates and strength in the US dollar. But, and India in particular, the Indian currency and stocks were beaten down because India is a major importer of oil. So with surge in oil prices, Indian currency had taken a beating. But over the past couple of months or so, we have seen that emerging market assets are regaining investor favor due to change in Fed's tone, and also because of attractive valuation after they were beaten down so much, so their valuations looked attractive, and investors are going back to emerging market, and Indian stocks have also seen a nice rebound. Now the bank reports later this month, I think on the 30th, and we have seen that estimates are moving up. ESP is 25%, earnings ESP is 25% as of now. So that suggests that the bank is likely to beat estimates again. It's a Zacks rank #2 stock, and I think it's worth a look.
Okay. Do you own it?
I do not.
All right. And you don't own either hers or yours privately?
No.
Okay. Thanks for that. Don't forget, check out more information on stocks and a lot of other things on our website, Zacks.com. Get over to the homepage. It's where you begin to look through it all. With Kevin and Nina, I'm Terry Ruffalo.